Ever find yourself grabbing that familiar packet of snacks, maybe some bujia or namkeen, and wonder about the journey behind it? How does a brand rooted in tradition navigate today's market?
It's a great question. And today, we're going to dig into exactly that with Bikaji Foods International Ltd. They're one of India's biggest names in ethnic snacks.
Right. So our mission here is to really unpack their latest performance, looking at their Q1 financial results for fiscal year 26, some big decisions from the recent board meeting. Basically, what's going on with this major player.
Exactly. We want to give you a clear, concise picture of how Bikaji is doing and where they seem to be headed. Cut through the noise and see what the data tells us.
And just so you know where we're getting this from, we're using their official press releases, the detailed outcomes from that board meeting, and their investor presentations, all dated July 23, 2025, so it's fresh info.
Okay, so let's paint a quick picture of Bikaji first. As you mentioned, a big name. Specifically, India's third largest ethnic snacks maker.
Third largest, okay. That's significant in a market like India.
It is. And what's maybe even more telling is they're the second fastest growing company in the organized snacks market there. So size plus momentum.
Interesting. And this isn't a new startup, right? It has roots.
Definitely not new. The brand goes back to 1993, launched by Shiv Ratan Agarwal. And the whole idea was built on really understanding Indian tastes, region by region.
That deep understanding, you can see how that would be key. How wide is their reach now in India?
Pretty vast. They operate across 25 states and 4 union territories. That's, well, most of the country covered.
And it doesn't stop at India's borders, does it?
No, they've really pushed internationally, exporting to 25 countries now: North America, Europe, Middle East, Africa, Asia Pacific. It's a global footprint.
Wow. Okay, so what kind of products are we talking about? We mentioned bujia, namkeen.
Those are core, for sure. They break it down into 6 main categories. Gujia, namkeen, those are the big ethnic ones. Then packaged sweets, papad, Western snacks like chips and things, and a category they call other snacks.
Other snacks.
That covers things like gift packs, which are huge during festivals, frozen food, a Mathri range, cookies. So quite a diverse basket.
Okay, that gives us a good sense of the company. Scale, history, product mix. But let's get to the numbers. How do they actually perform in this latest quarter, Q1 FY26?
Right, the financials. So the top line, revenue from operations, grew 14.2% compared to the same quarter last year. It hit 6,527 million Indian rupees, so about INR 6.5 billion.
14% growth, that sounds pretty solid. Is that just because prices went up, or are they actually selling more?
That's the crucial follow-up, isn't it?
Yeah.
And the good news for them is that there's real volume growth underpinning it. Volume grew 7.5% year over year.
Ah, okay, so people are actually buying more packets of Bikaji snacks. That feels more sustainable.
Exactly. It suggests genuine demand, not just inflation effects. It points to, healthy market penetration and people sticking with the brand.
And the bottom line, profit after tax, PAT.
Pat saw a smaller increase, up 1.3% year over year, landing at INR 585 million. And the basic earnings per share, EPS, came in at INR 2.39 for the quarter.
So slower profit growth than revenue growth. What did the management say about the overall quarter?
The managing director, Deepak Agarwal, described it as resilient growth.
Mm.
He pointed to strong performance and healthy demand across their product lines, reinforcing their brand position. Seems pretty confident, especially with that volume growth backing it up.
Resilient growth. Okay, let's dig a bit deeper into that profitability then, because the 1.3% PAT growth versus 14% revenue growth suggests there's more to the story.
Absolutely. Let's look at EBITDA earnings before interest, taxes, depreciation, and amortization. That grew 5.1% year over year to INR 963 million.
Okay, 5.1% EBITDA growth, still lagging revenue growth. What about the margin itself?
Right, the EBITDA margin was 14.8%. No, that figure was actually down 128 basis points compared to Q1 of the previous year.
Down year on year. But I thought I saw something about gross margins looking better. How does that fit?
Yes, that's the really interesting part, and you need to look at the quarter-on-quarter trend there. The gross margin stood at 35.0%, and importantly, it expanded by 260 basis points compared to the previous quarter, Q4 FY25.
Oh, okay. So while the year-over-year comparison for EBITDA margin is down, the more recent trend for gross margin is positive. What's driving that improvement?
It seems to be a mix of their own strategic moves and some help from input costs. Management talked about selective price hikes and ongoing cost efficiency programs to fight inflation.
Right, proactive measures.
Exactly. And crucially, they also mentioned a softening of input material prices.
What kind of input prices are we talking about?
They specifically called out things like corrugated boxes for packaging, laminates, pulses, and flowers, key for namkeen and buji and edible oil. Apparently for Q1, these costs were generally running below the level seen back in Q2 of FY24.
So cheaper raw materials plus their own cost savings are boosting that gross margin now, even if the year-ago EBITDA margin comparison isn't as strong. That makes sense.
Precisely. It suggests their recent strategies are starting to bear fruit on the cost front.
Okay, understood. Now let's break down that 14% revenue growth. Where is it coming from? What's selling best? Ethnic snacks must be huge for them.
Oh, absolutely. Ethnic snacks remain the powerhouse. They grew 11.2% year over year and make up, get this, about 75.3% of their total revenue. It's still the core identity.
3/4 of the business. Wow. But they are diversifying, right? What about the other categories?
They are growing, though not as fast as the core. Packaged sweets grew 3.1% YoY, making up around 6.6% of revenue.
Yeah.
Western snacks, things like chips, grew 4.2%, contributing about 9.2%, and Pop-Pad grew 5.8%, around 5.8% of the total revenue.
So steady growth in those other areas, but ethnic is clearly still king. I also saw a note about their retail business showing massive growth.
Yes, that was eye-catching. Retail revenue hit INR 212 million, the year-over-year growth, 291.3%.
290%. What's behind that huge jump?
A big part of it is the consolidation of the hazelnut factory business, which they brought in from October 2024. So it's partly an acquisition effect, but it signals a serious push into direct retail formats.
The hazelnut factory. Right. So that acquisition is adding a different kind of retail presence, perhaps more premium or cafe style, complementing their traditional distribution.
That seems to be the play. It diversifies their channels, potentially reaches different customer segments, and gives them learning in that modern retail space.
Yeah.
It's definitely more than just buying revenue. It looks strategic.
Makes sense. And what about the pack sizes? Are people buying small impulse packs or larger family packs?
They position themselves as a market leader in the family pack segment. And the numbers back it up. Family packs make up 57.8% of revenue, while impulse packs are 40.6%. So a bit more geared towards home consumption, but still a strong presence in on the go.
Interesting balance. Okay, let's shift to how they're getting these products out there. Distribution.
A key focus area for them. They've been pushing hard on direct distribution. As of the end of June 2025, they reached 326,361 outlets directly.
And how much did that grow in the quarter?
They added around 15,000 new outlets to their direct coverage just in Q1. That's pretty rapid expansion.
15,000 in 3 months. That's aggressive. What's the challenge in doing that across India? Logistics must be intense.
Immense challenges. Diverse geography, infrastructure issues in some areas, managing a large sales force, understanding hyperlocal markets, it's complex. But their total reach, including indirect, is now 1.234 million outlets. That's huge coverage.
Incredible reach. And how did different markets perform?
Their designated focus markets within India grew by 11.5% YoY. Solid. But exports were really strong, up 60.8%.
60% growth in exports. Is that just a rising global tide for Indian snacks, or is Bikaji doing something specific internationally?
They mentioned an increased presence of our products across various countries. That suggests a deliberate strategy, maybe stronger marketing abroad, new distribution partners, perhaps tweaking products for local tastes. It's clearly a priority.
Smart move to diversify beyond India, too, and they need the production capacity for all this.
They have it. Total installed capacity is 325,320 metric tons per year, and their manufacturing plants are strategically placed. Tumkur in the south, Kolkata for Western snacks. The original base in Bikaner serves the east. Helps with logistics.
Makes sense. And are they just relying on getting products on shelves, or is there active marketing?
Oh, definitely active. They mentioned social media engagement, like a Father's Day contest getting over 5 million views. That shows they're connecting online. Plus, they have a new product development pipeline, so innovation is ongoing.
Okay, so solid operations, expanding reach. Now, let's look at the bigger picture strategy from that board meeting on July 23rd. What were the key decisions?
Well, first, they formally approved the Q1 results we've been discussing. No surprise there. But the big strategic news was the approval of a joint venture in Nepal.
Nepal. Interesting. Who are they partnering with?
They're setting up a JV with a company called CG Foods Nepal Ltd. The plan is to manufacture, trade, and market the whole Bikaji range snacks, namkeen, pujia, papad sweets within Nepal.
Why Nepal? And why a JV instead of going it alone?
Nepal makes sense. Geographically and culturally, There are shared tastes. Partnering with CG Foods, a local player, is smart. It gives them immediate market knowledge, distribution networks, helps navigate local regulations.
Hmm.
It's a faster, lower-risk way to enter the market. Synergy is the key word they use.
Right, leveraging local expertise. Smart. What else came out of the board meeting?
They also approved incorporating a Section 8 company that's a nonprofit entity in India. It might be called the Bikaji Foundation.
A foundation for
Okay.
CSR activities.
It's exactly. For social development initiatives and their corporate social responsibility work. It signals a commitment beyond just profits, building goodwill, which can be really valuable for a brand like theirs.
A more holistic approach to the brand. Anything else?
Just one internal financing item. They approved a loan of 5 crore rupees, that's INR 50 million, to Bikaji Bakes Private Limited, which is a wholly owned subsidiary, likely for working capital.
Okay. And weren't there some other strategic moves recently before this board meeting? Something about a merger?
Yes, good point. Back in June, the merger of a company called Vinyawasini Sales Private Limited with Bikaji was approved. It was made effective from April 1st, 2024.
How does that impact the books?
They use the pooling of interests method for accounting. Basically, it means they combine the financials as if they were always one entity from that effective date. It smooths out the historical comparison.
Got it. And a divestment, too.
Right. During Q1, they completed the sale of a 51% stake in Bikaji Mega Food Park Private Limited. It was described as a non-material subsidiary, and selling the stake means they lost control of it.
So probably streamlining, focusing on the core business.
Looks like it. Getting rid of non-core assets to focus resources where they matter most. And wrapping it all up, the MD reiterated his confidence, committing to long-term sustainable growth through innovation, market expansion, and consumer engagement.
Okay, so let's quickly recap. We're seeing Bikaji post solid, or as they say, resilient growth in Q1, driven mainly by their core ethnic snacks. Volume is up, which is positive.
Yep. And while year-on-year profitability had some pressure, the recent quarter-on-quarter gross margin improvement is promising, likely due to cost measures and softening input prices.
Plus, they're making big strategic pushes, deeper direct distribution in India, the major export surge, and now this new joint venture to enter Nepal.
And don't forget the CSR angle with the foundation and the streamlining by divesting that food park stake. It feels like a company that's managing costs, expanding reach, and thinking about its broader identity.
Absolutely. So here's something to think about. You see Bikaji, a traditional powerhouse, expanding internationally, getting into direct retail, focusing on CSR. What does this tell you about how these established food companies in fast-growing economies like India need to evolve? They can't just rely on the old ways, can they?
No, clearly not. It seems to be about balancing that core strength, the ethnic snacks people love, with innovation, new markets, new channels, and building a modern brand identity. It makes you wonder, what could be the next big ethnic snack category to really take off globally? And how will companies like Bikaji, with their deep roots and growing reach, position themselves to lead that charge? Food for thought indeed.